What's going on? Welcome back to Trending Stocks. Today we're going to talk to you about SoFi. So it turns out, obviously, this quarterly earnings is no different than anything else. Regardless of the results, you do see a very significant pullback. So it is down 10.17%. To be fully honest, very lackluster. So institutions are trading it quite significantly, but not a lot of long investors. Where's Cathie Wood when you actually need her, right? But 110.81 million shares being traded, 43.7 is the average. I'll give you a quick overview of some of the current data points. In this video, I'm not going to give you the full breakdown of their earnings. I'll review it and maybe do a video tomorrow all about that. But tentatively, it was a triple beat, as you can kind of see right here. I'm going to play this video near the tail end. So Anthony was on CNBC, talks all about their Q1, but kind of within the questions, you can kind of already tell why the market is not really favoring SoFi's earnings. But starting off, shorts. No doubtably, shorts were going to increase at any sign of risk, or I guess fear, and they are currently increasing 2.91 million shares. 18.97% of the free float is being shorted. That works out to be 188.31 million shares overall are being shorted, and then cost of our average is 0.92%. As I said, leading up to today, any sign of weakness, the shorts were probably going to increase their position, and it will probably continue so up until it does reach a new 52-week high, roughly around 23%. So again, that's might be something in store. Of course, this rest of the week is going to be a very volatile week, but utilization is 70.84. Short score is 71.57. As of late, there hasn't been any new analyst ratings, but probably by the business day close, you're going to see quite a lot. So this probably will dictate what does happen with SoFi going into tomorrow and everything else. Going over what big money has been doing, so you can kind of see just there's been quite a lot of transactions, only one above $1 million, so 7.75 million, and regrettably it was a sell, and you can tell that based on the bid, the ask, and the selling price. So institutions are trading it, and algorithmic trading has their hands all over SoFi today, as well as shorts, but not a lot of long investors, like I said. And I didn't actually listen to the conference call, so I'll be doing that probably right after this video as I prepare for tomorrow's video, just to give you a good summary of everything from their earnings, so the good, the bad, and clearly the ugly. But institutions aren't really satisfied based on this. Dark pool, very active as usual. So just looking here, so 250 transactions. So there's a lot more bigger transactions on the dark pool, so 1.76 million. But still nothing really crazy that is making you say, hey, this is a amazing buy, which maybe I'm a hypocrite because I actually did buy a little bit this morning, but still beside the point. Institutions aren't buying. Looking at options, $16 million in calls being purchased versus 5.89 in puts. Sentiment wise, 46% of all the options being done today are optimistic and bullish, but no doubtably a lot of that is being hedged by shorts. So in my opinion, this is somewhat of a skewed number, if that makes sense. And of the call options that are being purchased today, you see a consensus for it to be around $8. So looking here, you do see a lot of optimism, and all of this was purchased today. So there is a certain number of individuals that do feel that today is a overreaction. And then looking at puts, you do see a consensus for it to be sub roughly 650, so more of a full-on breakdown of the technicals. And I'll quickly go back over to Interactive Brokers just to give you a good overview of the Elliott Wave technicals, because so far in the past it's actually been very accurate, but it does have $7.16 as a pivot. So for as long as SoFi is below that, then this is where it is anticipated to get to roughly the mid sixes, so more linked to the options and the puts that are being purchased. So definitely need to watch for that $7.16 in the next couple hours, or roughly about 2 hours or 3 hours left in today's trading day. And then aside from all of that fun stuff, just to give you a quick overview of this, so with it right now at $7.08, it is trading between this S3 and this S2. So once again, the technicals are kind of breaking down. $7.14 will be that next strong resistance slash target, and then $6.84. And if this does break, then yes, you can anticipate kind of the mid sixes to low sixes next from here. year. Just to give you a quick overview, so it did transition from the higher to the lower percentile of the Bollinger Band, did break below that 50-day moving average. You also do see that inversion starting to occur, so red line above the white, showing a underlying bearish sentiment. And plus, like I said, the first sign of weakness, you are going to see a pullback because essentially SoFi was considered overbought. So that's probably one factor why it's going down so much today as well. A number of retail investors have been getting out today. So clearly, if you guys did listen to the conference call or the earnings call, let me know, was there something that was very, very obvious that was negative, or is it all of this a massive overreaction? So let me know your thoughts on that. And like I mentioned, I'm just going to quickly play this. In reality, I love the way Anthony does speak, but obviously the questions that is being posed clearly is oriented towards some of the negative aspects of SoFi. So just stay tuned.
Joining us now exclusively is SoFi CEO Anthony Noto. Anthony, welcome back. Good to see you.
Good to see you as well.
So why is the stock down 9% despite a strong increase to guide? What is the street taking from this?
Yeah, I think it's important to focus on the results and what that means for the full year and then what that means for our 3-year outlook. So in the quarter, we achieved 26% year-over-year growth in revenue, $581 million. We had 25% EBITDA margins. We grew that almost 100% at $144 million. More importantly, we have grown tangible book value per share 16% sequentially by about $600 million. We had record deposits of $3 billion and really strong overall performance. The most important thing about those trends that I'd point out, and the reason why 2024 is a transition year, is the growth was driven by low capital, high return businesses, our technology platform business, and our financial services businesses. Those two businesses, when combined, grew 54% year over year against lending that was flat. As we came into 2024, given the uncertainty in rates and the economy, as well as liquidity for the industry, not us, and despite having excess capital, we made the decision to put the resources behind these high return businesses that actually are big enough now to drive our overall growth and profitable enough to do that. And so that's the key message coming out of the quarter, is that transition is taking place and going incredibly well, which sets us up for a great 2024. We actually raised 24 revenue guidance by more than our beat. The comparison to Q2, we'd not provided Q2 guidance before. The street had an estimate there that was above what we guided to, but for the full year, estimates will be going up relative to consensus by more than.
So obviously analysts just had too high of expectations. So when SoFi did come in with their Q2 guidance, with it being lower than Wall Street's, that's kind of one thing that did really pull it down a little bit.
Our beat in Q1.
Okay, so that, I mean, thanks for clarifying all the expectations game. What can you tell us about credit quality right now for borrowers?
Yeah, what we've said is that credit will normalize back to pre-COVID levels, and we're on track to do that. Our life of loan loss targets for our unsecured personal loans are 7 to 8%, and we remain comfortable with those expectations. We are higher in credit than most. We focus on prime credit, and we have very high FICO scores and good cash flow ratios when we underwrite credit. But we've taken a more conservative view on credit, primarily because of the fact that it's not clear where rates will go. At one point last year in October, people were talking about higher for longer. Then by the end of the year, they were talking about 6 rate cuts. And now we're looking at 1 to 2 rate cuts. That type of volatility and uncertainty creates a backdrop that we think allows us to be more conservative in lending and much more aggressive in technology platform in our financial services business. A lot of people don't realize that in our financial services business, we have SoFi Money, SoFi Invest, SoFi Insurance, SoFi Credit Cards, and a few other high margin businesses. And that's now profitable, which allows us to scale that acquisition. And that's what's driving our 44% growth in members to 8.1 million now and almost 12 million products.
Anthony, there's been some dissection of the eco data, the macro data last few days, specifically the saving rate going to the low 3s. And some argue it's a sign of stress, that consumers are sort of living on the edge. Others argue this is all about the boomer generation spending every last penny of their nest egg. Do you have any idea what's going on?
Well, we definitely have a member base that's saving. Our deposits grew a record $3 billion in the quarter. We provide a very attractive interest rate of 4.6% on your savings with direct deposit or with a large recurring deposit on a monthly basis. So we're seeing great trends there. And it's not just the growth in deposits, it's also the growth in spending. We had about $1.8 billion of debit spending on the platform, up from the low $1 billion last quarter. So we're annualizing about $8 billion now. And again, that's on a member based in SoFi Money that's at 3.5 million.
And so there you have it. Obviously, a lot of the questions that were posed are essentially oriented towards banking. So Wall Street is just treating SoFi as a bank, plain and simple, nothing more than that. And yeah, so it's kind of unfortunate. Let me know your thoughts on SoFi. Have you been buying today, or where do you see things going? Don't forget to hit that thumbs up and subscribe. I always greatly appreciate that. And with all that, I appreciate all of you watching.